What's going on, everyone? Good afternoon. Good afternoon. Ty, how are you? What's going on? Just waiting for everyone to get pinged. We'll get started here just a second or so. See something. Alright, perfect. Okay, gotcha. All right. What's going on, everyone? I gotta say, today was definitely one of those days where it kind of made up for the amount of trash volume that we've had. More so, what this entire week, I want to say, because if we actually notice, we were trading on relatively low volume this past week so far, and it was a lot of whipsaw, a lot of chop that we've had. But this was some serious whipsaw that we had this morning. By the way, Derek, what's going on? Randy, hey, what's going on? So we all woke up. We saw pretty much futures were pretty much relatively red. We saw no. We ended up seeing the CPI come in. It actually was. I think everyone is basically anticipating that it was going to come in hotter than expected. It was basically 8.2%. I believe the higher end of the forecast was roughly around that 8.3%. So it kind of fell in line with what expectations were. That's why we saw the pretty much the immediate drop right off of the results of that. And then we also saw a little bit of a tick up higher on jobless claims as well, which I think actually just fueled the fire for the most sake. So that was pretty much what I anticipated going in there was pretty much seeing a higher than expected CPI. But then the fact that we got it pretty much in line with expectations, I think that's what's more so triggered a lot of this reversal. Because keep in mind that if the number had came in hotter than that 8.3%, then I think that's when it definitely would have put more pressure on the Feds to pretty much do a more significant rate hike. But the fact that it came within lines of that forecast, that's why I feel the market felt the ease and we saw such a rapid recovery as we did. That's particularly what my mindset was when I was looking at it. When I saw the V-shaped recovery, of course, few things took in place. Obviously, identifying a descending support trend line that was actually taking place upon that little morning drop. Then also pretty much identifying the volume that took place today compared to maybe about 2 weeks ago, or if not more so, a little bit more longer than that. That's pretty much the two driving factors of identifying that reversal that took place this morning. But to be down 7 points on SPY, to have such a recovery up about 5 points on SPY at the end of the day, that was just pretty gnarly to see that kind of drastic price action. That much of just a swing in a matter of what I think it was about 3 hours into the market open that we were already almost pushing green on the day. That's a pretty swift and pretty much rapid movement that we saw, and I have not seen in quite some time, just based upon that strong of a reversal. So that's what actually was pretty much on my mind. Of course, looking at takers, I think Avery called out this morning, watching Microsoft, that you could make a case that Microsoft kind of led the way for this reversal that took place. I was actually more so watching the semis. I think I've been watching the semis for quite some time for this little U-turn to take place. And the video was pretty high on my watch list as I name dropped that one this morning. I was also watching, there was something else I was keeping an eye on, just trying to remember things that I kind of glanced at. Of course, I was watching the dollar that we had a little morning pop, then ended up regressing. We saw the bond yields this morning that gave us a pop. That started to regress a bit. The bigger concern was the fact that the VIX had actually gone red and it was regressing as the market was giving us such a sharp recovery. That was a really big X factor because had we saw the recovery this morning take place and the VIX was still staying elevated, that would have been a warning sign this morning. But Avery actually alerted that he pretty much called that out, giving you that warning sign potentially that the VIX dying and the market rapid recovery. That was definitely a stronger sign of this reversal taking place than saying that maybe we were gonna be a short-lived recovery and we would go back right back down intraday here today. So that was the other thing that just crossed my mind as well, thinking back to this morning. But as I get into SPY, kind of just giving you the projection, as I mentioned about the volume here, I was actually going to point that out. There we go. So if you actually notice the volume that we relatively had today, we had not seen that amount of volume pretty much until until we go back towards September 21st, September 22nd. That's particularly what stood out to me. So as I go back in, you see the amount of volume that we had this morning at the open. That dates back towards September 21st, which was particularly, if I remember, I believe we had FOMC that particular day. So that's basically the last time that we saw this amount of relative volume that we had from this morning. That's the one key thing that stood out to me this morning. Once I saw the volume start to pretty much escalate as much as it did on that morning little V-shaped recovery, now I'm trying to identify, okay, is this little V-shaped recovery going to sustain? Are we going to see that continuation, which we basically saw through most of the day? And that's identifying where my trend line, descending trend line support was. As you pretty much see, I created a descending channel action off of this to see where our overhead position is, overhead resistance is. So that's what I was able to identify as first the volume, then identifying the structure that we're looking at. So that's what I wanted to point out this morning. Of course, is just first the volume. Now getting into the descending channel here, this is where we particularly got above our pretty much our close of yesterday, and that's when I wanted to see, okay, we actually got over the close of yesterday. That was one a positive sign. Now that you see that I basically have a descending channel action, we got over the median of this descending channel action, breaking north over that 360 half mark, and we were able to go right into a resistance here, sitting right around this, close enough to 365 mark. So as I'm going to go into tomorrow now, I want to see, do we see a consolidation here? A nice little pullback consolidation to then get that next leg higher into the downtrend resistance, sitting roughly around that 371 half to 372, depending how sharply of a move we get to the upside. Otherwise, if we just get a pretty much a strong gap up tomorrow morning without any kind of significant consolidation or pullback, then we're going to make that push right into that 372 mark at the downtrend resistance. And my gut feeling will be that we're going to need a pullback at 372 after a strong gap up. And then that's going to be where we're going to look for that second attempt to break north of that downtrend. So that's what I'm pretty much looking at. Obviously, highlighted, you could obviously see the gap fill. That doesn't complete until 372.92 to point that out. Above the 372.92, then we have our next level of what was pretty much a relative FVG. That's where you had your imbalances of relatively high volume. And that's where we're going to look to pretty much test that high dating back towards October 5th. And that'll pretty much put us right up towards close enough to that 378, 379 mark that we'll be targeting. So baby steps right now. I mean, today was definitely not a baby step though, considering that kind of reversal that took place, that amount of significant range that we traded in today. But baby steps going into tomorrow. Let's see if we can pretty much get a nice little dip. I think that will be pretty much the most significant thing. In terms of that dip, look to see if we test down towards 372.75. That's particularly where I'm going to look to see if we get the dip down, which would be roughly about a 3 point dip on SPY. If be the case, maybe we get some mixed reactions going into tomorrow. And we see a little bit of a morning dip, give us that nice consolidation, and then we get the next leg higher, pushing north to that 372 mark. All right. So that's particularly where I'm just kind of just crossing my T's here, just looking at projections and how I can potentially see this playing out. Now we get into, obviously I told you the key factors that I looked at this morning. One, I repeated, was the volume. Two, looking at the structure on SPY. But those of you that were in the dojo chat, what you pretty much how well you saw me posting in the dojo was a lot of structures in which they look like the broadening wedges. And those of you that are familiar with a lot of my patterns and those that I'm pretty much very fond of, this is particularly one of them. I can probably drop down towards about the 15. But this is basically what I was seeing across the board in a lot of mega cap tech names. And that was a descending broadening wedge action. And that's exactly what was my third indication to say that this rally should sustain. The volume was one, the structure on SPY was pretty much telling me otherwise again. And then also seeing the descending broadening wedges, which has been one of my go-tos for identifying when we're going to see a much stronger reversal than anticipated. And so as I saw this continue to take place, we saw the nice little V-shaped recovery completing right into our gap fill. We saw the nice little high and tight, you want to say a flag, little pennant action. And you see the strong little candle that took place right into lunch hour there, right over the downtrend resistance. You had the significant push into the day. You pretty much ended up testing what was a prior level of distribution dating back towards the 10th. And now we're kind of sitting in a nice little rising wedge type of action that's taking place. So that's where it pretty much comes into play where Do we get a little bit of a breakdown off of this rising wedge? See somewhat of a significant pullback to quote unquote give us a dip. Maybe we see this dip down towards 232 half particularly, and then we get that next leg up higher. In which overall, the bigger picture you're looking at Microsoft, if this rally does sustain, is looking towards this gap fill to be tested here, which is going to be up towards 241. So preferably, if I do get this down towards 232 half, I would pretty much be very fond of getting 240 calls here. And obviously, I'm not looking for 0 DTE tomorrow. Obviously, if 0 DTE will obviously depend upon how we look tomorrow morning, because whether if we get the gap up, a pretty strong gap up tomorrow morning, that's going to change the landscape. Or if we get a morning dip, that will change the landscape. So it's all going to depend. But 240 will be my overall PT here sitting on Microsoft. Well, not 240 will be my PT, but the strike that I'm going to be looking at going out towards next week expiration, in which this should set up for this rally to continue going into next week. Is my bigger statement. So I want to get the 240 calls, and then that way, if we end up testing the gap fill at the bare minimum at 241.32, those 240 calls should go into the money just slightly, and I can cash out on that. So that's going to be what I'm going to look at here on Microsoft. But the bigger picture was identifying the volume, the SPY structure, and the broadening wedge, and that pretty much brings me into a lot of different names. I can even point to, say, Tesla. I think roughly the same structure that we had this morning. This one actually, in particular, though, has not broken out just yet. That's something that I'm going to be paying attention to tomorrow. We know that the weakness on Tesla has been very significant the past, what, 2, 3 weeks more so than it has prior to that. But this has not broken north of the descending broadening wedge action. I believe someone in the dojo actually swung calls on Tesla. We'll see how that plays out. But I'm going to look for this one. Let's see if we get the break over 223 here. You get the break over 223, and this should not have a problem making its way up to 228 and a quarter, and potentially make its way over a final PT sitting at 229, close enough to 230 is what I'm looking at. All right. So this is one where I think it is a lagger, if I want to say that. So given the fact that I'm still bullish relatively on Microsoft, but if I'm looking for the lagger in all of this in mega cap tech, I think Tesla is probably one of those names in which it could potentially start to lead the rally more so as being a lagger today. All right. Sorry about that. So, by the way, Christina, what's going on? If any tickers you want to take a look at, just drop a name. Otherwise, I'm gonna go through a few names. We'll probably drop down, see quite a few of the tech names. Nvidia was one that I touched base on at the top of the hour here that we started live, and I said this is one that I was particularly watching. I had actually been watching the semis for quite some time. We've seen that the semis actually kind of started the whole bear market rally, in my opinion. I saw that relative weakness on the semis earlier on before a lot of the mega cap tech names gave us that rug pull. And so I'm gonna look for the semis to really give a. I was looking for the semis more so to really give us the early sign of this reversal. And so Nvidia, what a beautiful rip from down at 108, pushing north almost to 120. Well, it did push north of 120 here. But you see the descending broadening wedge, of course, same structure as Microsoft, same structure as Tesla, all three bullish. And now you see the little pennant that's taking place here. So this can definitely end up pushing north out of this pennant here. That's definitely not something I will be questioning. But over 121 here, a lot of headway to be made. But then the bigger resistance that I'm watching here is sitting roughly right around 122 half for the continuation, and then the target towards the major gap fill sitting at 126 half. All right. Otherwise, you break south, look for support roughly right around 117 high, 117.75, and then that'll be where I look to see if we have a potential buy the dip type of opportunity. Otherwise, then you're gonna look forward to regress, and that would come right back down towards 115.43. All right. So that's another one I'm gonna definitely keep an eye on more so with Nvidia and Microsoft. Probably gonna be my two favorites going into tomorrow. Obviously, I said Tesla's a lagger, but I want to see how that opens up pre-market before I kind of dip my hands into that. Just because even though Tesla has a weird way of its price action, and I don't anticipate that it's going to get that push over the resistance on the initial push, so it may take a little bit more time for that to kind of play out. But if we're going to continue going into next week with this rally to sustain, I definitely think that going into next week, Tesla's definitely going to likely lead the way. All right. Annette, how are you? Rev, let's take a peep at Rev. Let's see what's going on. Nice push today, actually. I have not looked at the sticker. I mean, so I'm not too familiar with it, but that is definitely a nice push. Let's see if we can zoom out just a bit. Definitely a convincing downtrend break. That's something that's very significant. In terms of getting continuation on this, I can tell you the bigger level that I'm watching here is roughly right around 530. So you're within a few cents of that. Over $5.30 here. That should make way to push towards the high of the day that you had from this morning at 5.64. Above 5.64, this is going to put you into, that should push you into the 4-hour FEG here, where you had that strong imbalance of volume there, and that'll make its way up towards 640. So over the 530 mark is where I would particularly say that you should look to get into a position. Otherwise, if it ends up staying relatively under 530, I think you're pretty much playing with a gamble here, in which case you can retrace about 50% at least, and that would take you right back down towards 4.52 on Rev. All right, so either you end up looking to buy it off of, I want to say, a 50% retracement from this morning 4-hour candle at 5 point, I said 4.31, or you end up looking to break north over 530 for the upside and taking out this morning's high. All right. Let's see what else. You mentioned XLE. XLE was actually when I was watching this morning too. That was a strong push that we had off of energy. And the noticeable thing is actually on here, and I didn't even realize I had that. But there's an anchored view up that pretty much dates back towards our most significant gap down that we had from September 23rd. And our upper band anchored view up here, once that was reclaimed this morning around that 81 mark, that's where we had the more significant push. And you see the continuation that you had off of that 4 hour. So that was a beautiful move off of XLE this morning. You did end up pretty much getting close enough to the gap. It's not yet completed. That dates back towards October, well, August 29th. That dates back. And that gap fill is going to be completed at 84.07. I would favor the fact that we get a pullback tomorrow, though. That's what I would favor. In terms of that pullback, look at support right around 82.15. That's what I would look for as your support level going into tomorrow. I would favor the support to be hit before we end up getting in the completion of gap fill. So 82.15, look to see how that ends up acting. Otherwise, that could end up being a breakdown in which we retrace even further, and that'll take you down towards 81 and a quarter. All right. So 81 and a quarter would be my ultimate potential strong level of support, and that's where I would look to buy off of. Otherwise, you're looking for the completion over the gap fill here, which I think will take you into the gap above, sitting over 86, roughly around 86.87. I would wait for the gap to be completed, wait for the break over 84.07, and that's when you can start to target towards 88 on the completion of the gap fill above, which is a larger degree gap. All right, and that's what I would go about with XLE. But that was a very strong. I think XLE kind of paved the way this morning because XLE actually took off before Tech did this morning, and that was a beautiful sign. We had already seen the banks actually performing pretty well this morning. We do have bank earnings tomorrow, so that's kind of to me is a little bit of a wild card. So that's where I'm going to be watching as well. I think the banks are going to be relatively a wild card. How the banks are going to be coming out forecasting their guidance is likely going to be the bigger thing that I'm going to be watching tomorrow morning. So we have, I think, an onslaught. We have JPM, Citi, I think Goldman Sachs. So quite a few different names in the banks reporting tomorrow. That's going to be a very big highlight, a big catalyst for how the market's going to pretty much play out. And what I really want to see off of the bank earnings is how the rotation takes place in terms of market sectors. So if in the event that, say, the bank sector goes up, what's going to continue to pretty much go along with the bank sector and actually continue the rally in the broader market? Isn't in fact going to be the tech that actually leads us pretty much with the banks, or are we going to see maybe the industrials, or are we going to see energy lead the way with the banks? That's going to be my question mark going to tomorrow morning. So, if there's one big takeaway from our live here today, I want to see once we get those bank earnings, see where how the rotation takes place in the market sectors. What's going to end up being your leaders, and what's going to be your lagger for the day tomorrow, especially those of you that are looking at zero DTE. That's really going to be the one thing that you need to decipher about to see how we end up playing out the day. Because if the banks end up dropping tomorrow, and that's pretty much your flip side of the scenario, is it really going to be XOK, pretty much your Q is the tech that ends up just keeping us afloat, keeping the rally going, and along with other sectors, and then banks just pretty much die out. So that's what pretty much is on my mind as well. But like I said, I would anticipate we likely get some kind of pullback, however significant it is or how minor it is. Look for the consolidation. I think this morning was more so rapid, in which case you likely found yourself chasing to the upside, which you actually had multiple opportunities to chase to the upside. But let's see if we get a consolidation tomorrow, and then we get the rip to the upside, and that'll be a beautiful day for zero DT. All right. But other than that, I think I will conclude today's segment there. I appreciate you guys all joining. But other than that, you guys have a great evening, and I will see you guys. Actually, I will not be on live tomorrow, so I will see you guys on Monday for